Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So, they successfully trapped the Bitcoin bears. The topic that we talked about on our channel 11 days ago, they want to trap the Bitcoin bears, has finally played out. The short mentality on Bitcoin is no longer a crowd of traders. Bitcoin is coming and retesting some very crucial levels, targets, patterns, oscillators, moving averages, all across the board on multiple time frames. So in today's video, we're going to talk about what is the next move for Bitcoin. Is this the ultimate position of strength we've been looking for to enter that next trade over on Bitcoin? Let's dive into the video and find out. Well, first of all, what happened for Bitcoin? Well, Bitcoin pumped about 7% yesterday after the crypto asset manager Grayscale won their lawsuit against the SEC, which is leading the markets to hope that the Grayscale ETF will get pushed through and accepted by the SEC. I would like to remind you the SEC can push this back until at least 2024 before we do see that decision in the markets. And knowing the SEC, they probably will try and fight this. They'll try to push this back as far as humanly possible. So I wouldn't expect any ETFs to get accepted until maybe Q1 of 2024 to say the least. Now let's dive into the technical analysis, and I want to start off by showing you all of the retests which are currently happening for Bitcoin. This is actually the scenario we were talking about in our video about a week or so ago. This was the perfect scenario for the Bitcoin bears coming back up and retesting this level. This was the position of strength that we were talking about. So let's talk about these retests which are happening. Now, first of all, over on the daily time frame, you can see that we have formed these two falling wedges. And while technically we have actually come down and hit the price target of this falling wedge, so this is technically complete, it is just interesting to see that we've reverted right back up to this trend line, right back up to the falling wedge. And if we do manage to solidify a daily candle body close beneath this, I think momentum could continue to carry back down to the downside, because as you can still see, since we have been topping out, we are still in a structure of highs, lower lows, lower highs, lower lows, and lower highs. If we get rejected from this level, it's not going to look too pretty. If we do come over to the next chart over on the daily time frame, you can see we have had this fib channel drawn out. What was once previous support in terms of the bull market support bands is now getting retested as resistance. So this is definitely a beautiful momentum reset for the Bitcoin bears. If we come over to our next chart, you can see we've got this drawn in a slightly different way. This is the technical way on how you should be drawing a fib channel from the swing low to the next swing low to the swing high, between the first swing low and the next swing low. So while this data point isn't included within this trend line over here, you can see we've included it within the next chart over here on the daily time frame. What you can actually see is this is the head and shoulders pattern that we've been talking about on the channel, with a price target all the way down at 18,500, and we're getting very, very close to retesting this level. Like we said, this was the perfect scenario we were hoping for in our previous video, to be opening that trade from a position of strength. This is what we drew out. As you can see, scenario number one, where we've come up and retested some of these levels, has come into fruition. We're now just going to be waiting for scenario number two and seeing if this rejection does start to take place. Now, as you can see over on this chart, as the trend line is drawn slightly differently, we haven't actually retested this trend line yet. So I do believe we are going to be topping out for Bitcoin anywhere between 28,100 and 28,500, where this mega trend line starts to come into place. This is the trend line which has been holding Bitcoin up throughout the entire rally that's been taking place in 2023. And we're almost retesting this at this moment in time in late August. I now want to come over to the Bitcoin CME futures, and as you can see, we have filled the CME gap. This was one of the major reasons why I wanted to see us magnetize back up to this 27.5 to 28k region, because we recently formed a CME gap at 27,600, and we've now come up and filled this. If we delete this from our screen, because as you can see, we've now filled it, the next CME gap, which I've been talking about on the channel, that I think is going to get filled before this CME gap up here at 36,000, is this CME gap all the way down here at 20,000, which was formed all the way back down here in early March. This is one major reason why we wanted to see this retest, because now it gives way for much more momentum to come to the downside without worrying about this glaring CME gap round about the 27,600 region. You can also see in this chart, we are of course retesting the bull market support bands and the 200-week moving average, but we'll come over to a more simple chart to highlight this right here. as you can see, if we amalgamate some of the most important trend lines which we are touching, you can see, like we detailed earlier on, this is the trend line that we're retesting. It looks a little bit weird over on here because this is the logarithmic chart, and originally we have this trend line drawn on the linear, in case you're wondering why it looks a little bit weird over here. But let's come back over to the log, and I want to show you everything that we're retesting. So we're retesting this important trend line. We're retesting that CME gap. We're retesting this massive rectangular box of resistance, which we've been talking about on the channel, being the most important resistance you would need to get above to start the bull run. As we're on the weekly time frame, if we load in the weekly EMA ribbons, you can see, zooming in, we are currently retesting the weekly EMA ribbons. Let's load in the 200-week moving average. We're currently beneath and retesting the 200-week. Load in the bull market support bands. Let's get rid of these so you can just see these as well. We're retesting the bull market support bands. So if we look at all of these charts, we're currently retesting some technical analysis patterns. We're retesting upper bounds over on the stochastic RSI. Some of these oscillators have come up to this overbought region right now as they have reset momentum. We're retesting the ascending channel, the neckline on this massive head and shoulders pattern, which is also the trend line of the 2023 uptrend. And all in all, guys, we've just filled a new CME gap and we're retesting some of the most important levels for Bitcoin at this moment in time. Now, if you've been watching my channel, you know what I think the next direction for Bitcoin is. I've got two very specific price targets in mind in the macro, which I think will be coming down to in the next month or so. That is starting off with the massive CME gap that we've got all the way down here at 20,000, followed by this head and shoulders price target all the way down here at 18,500. But there's something else in addition to the fact that in the macro, we are literally completing one of the most important retests that Bitcoin has seen in all of its history. And that is the fact that if we come over to Bloomberg and look at Bitcoin's 180-day realized volatility, we are currently almost at record lows that have not been seen since 2015. And when Bitcoin's 180-day realized volatility has been this low, this is typically a turning point in the markets. So the question currently isn't, is Bitcoin getting ready for a big move? I think it's very clear to see every single time that realized volatility comes this low, we typically are getting ready for a big move back up in volatility. The question is, in which direction is volatility going to break? Well, considering how, when we're looking at all of these retests that are happening from a bearish perspective, it seems more likely than not, unless we just start tearing through some of these resistance at 28.3, 28.5, 29,000, etc., that we are currently in a worrisome situation if you are a Bitcoin bull. However, if you are a Bitcoin bear right now, with all of these retests that are currently happening over on the chart, this is the position of strength that we've been waiting for. This is what we were talking about in our video 11 days ago, saying they want to trap Bitcoin bulls. A lot of this was somewhat baked into the charts. Of course, this news event which came out is really what moved the markets, but this is exactly what we were hoping for. This is what we were talking about over on YouTube. This is what we were talking about over on Twitter. We were hoping that the markets pushed back up to 28,000 and had a momentum reset so we could start looking at new short positions in the market. So is this the ultimate position of strength that we've been waiting for in the markets? I think it is. If we come over to the Bitcoin exchange liquidation map, you can see that shorts are no longer in euphoria. This was the complete opposite to what we were seeing in our previous video. If you look at the thumbnail of this, you can see the shorts were absolutely outweighing the longs. And at this moment in time, the environment has been flipped on its head. Now you can see longs are moving into euphoria, potentially not realizing that we are having a bearish retest from a lower low, lower high trajectory. And I would like to say on the weekly time frame, if we do manage to close beneath the 200-week moving average at 27,600, it is not going to be looking good for Bitcoin whatsoever. So once again, is this the position of strength for Bitcoin bears that we've been waiting for? I do think it is. As you know, if you've been watching my recent Bitcoin videos, and if you do follow me over on Twitter, you know 28,000 was the region that I was looking to open shorts on for Bitcoin. Unfortunately, yesterday I had a minor accident. I had to go to the hospital. So unfortunately, I wasn't able to enter the short that I wanted to enter up at 28,000. Sorry, I wasn't able to make a video yesterday. Hopefully you guys have watched the previous video, follow me over on Twitter, and some of you got your shorts filled up at 28,000. If you did miss the opportunity like myself to short at 28,000, in the macro, is this the worst position of strength to be entering a trade from? Absolutely not. as of the time of recording, if we're looking at how much we're up from just yesterday in the past 24 hours, we're still up 5%. Now, we have retraced some of that 8% pump to the upside, but in the macro, I do believe Bitcoin is sitting at the ultimate position of strength in the higher time frames. So I am myself personally going to be opening some lower leverage shorts at this moment in time. I do want to leave the opportunity for higher leverage shorts up at round about 28,500, 28,600 or so. So make sure you come and join my Discord. The link for that is down below. If I do see a perfect opportunity, if we do manage to have a tiny bit more of a push to the upside and retest some of these higher time frame levels, I will be entering a Discord exclusive trade. I will of course keep you up to date over on YouTube, but I will be posting this first over on Discord. So make sure you come and join the community for that higher leverage trade from a better position of strength. But in terms of the macro, at this moment in time, it seems like the short mentality is no longer a crowded trade. Being bearish is no longer cool. Bulls are currently sitting in a small amount of euphoria, and I do believe this in the macro is the perfect position to start entering 2x leverage, 3x leverage, etc. And if we do push up a little bit further to the upside, I will be adding to my longs. I will be adding margin and leverage up positions of strength at slightly higher levels like 28,500, 28,600, etc. Now, wrapping up the video with a tiny bit of macro. In the next 48 hours, we are going to be moving into September. And once again, I would like to remind you of this stochastic RSI monthly fractal, because I personally believe as soon as we open a new candle on the 1st of September in 48 hours, I do believe this is going to allow the stochastic RSI to fall into its next data point, and we will see a bearish cross as soon as September. Additionally, like we talked about earlier, with all of these retests which are happening, you can see if we come over to the MACD and look at this bearish fractal, which we recently talked about, and why we think that we're in a situation like this, you can see since we've been breaking down to the downside, we have had a green candle to the upside, and this has allowed for a neutral bar in the histogram to appear. And the last time this happened was round about this area over here where we had a retest. So I think we're in this stage where we've already capitulated to the downside following the MACD fractal, and we could just be having a quick retest back at some of these levels like we had over here before we follow it up in the next week or so with much more downwards momentum to come for the markets. If we come over to the total cryptocurrency market cap, just like Bitcoin, we are retesting some very crucial levels right now: 200-week moving average, bull market support bands, weekly EMA ribbons. The total altcoin market cap is much weaker. We're nowhere even close to retesting most of these levels. So altcoins right now, I do believe they're still in a position to get decimated. I see the Bitcoin dominance making higher highs and higher lows like we've been discussing on the channel, and I proceed to believe that Bitcoin is going to continue to outperform altcoins. And this is why, at least at this moment in time, I'm not really rushing into many altcoin DCAs. You know, if you've been watching the channel, that we've got DCA orders set at Solana, we've got DCA orders set on Cardano, but I'm still being relatively picky, and I believe we can afford to be a little bit picky and a little bit reserved while we are still witnessing these macro bearish retests. In the macro, Bitcoin dominance is still heading up, which is indicative that especially if Bitcoin comes down, altcoins are going to bleed out a lot harder than their Bitcoin counterpart. A quick update on the S&P 500. I don't want to spend too long talking about this because I will actually have a new video potentially coming out tomorrow. Veterans of the channel may remember that we were previously looking at this 2008 S&P 500 fractal, which was beautifully tracking up until about November, where they started to heavily diverge from each other. I've actually found some new 2008 fractals which don't involve the price chart, but which involve economic data. And I'm going to be compiling these economic data components, and we're going to be talking about that in our next video, which should hopefully come out tomorrow, if not the day after. But I do just want to wrap up on the S&P 500. As you can see, we have been forming this ascending channel or ascending wedge, depending on how you want to draw it. And at this moment in time, you can see that we are currently about to solidify a retest round about the 4,500 to 4,515 region over on the S&P 500, and this could be one of the last retests that we see to the upside on the S&P 500 throughout the rest of 2023 before we do proceed to start rolling back down to the downside like we have been predicting. We also have a lot of very important economic data coming this week, but we're going to talk about this in the next video, so stay tuned for that. There's a lot of very important economic data fractals which I want to talk about that aren't necessarily playing out in the charts, but which are playing out in terms of the economic data, which will be leading the market. So for today, my friends, that's all I've got. Once again, Bitcoin is in that position of strength that we've been waiting for. I'm openly taking positions on low leverage to short the market at this moment in time. Once again, apologies I couldn't make a video yesterday. However, if we do manage to push up a tiny bit further, I'll be letting you know over on Discord with some Discord exclusive trades when we're entering from the ultimate position of strength on higher leverage. However, don't be surprised if we just start rolling back down to the downside right now. Keep your eyes on the weekly time frame. If we start closing beneath some of these very crucial levels, like the bull market support bands at 27,700, the 200-week moving average at 27,600, the weekly EMA ribbons at 27,200. If we start closing weekly candle bodies beneath these, specifically the 200-week at 27,600, then it's not going to look good for Bitcoin whatsoever, and we might come down to the price targets that we mentioned between 20,000 and 18,000 earlier on in today's video. So stay tuned for the next update, my friends. As always, if you enjoy the content, make sure to let me know down below by leaving a like and a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. Follow me over on Twitter at 618_cowboy. Make sure you join the Discord in the description down below. It's been your boy Cowboy Trades. I'm out. Peace.